Hey everyone, in today's episode, we're going to be talking about the Colorado Springs real estate update for January 2021. We've got Jenny Bayless, our expert, on the line. Jenny, good morning.
Good morning, Chris. How are you doing?
Really good. I know we're on a time crunch here. For listeners out there, we're going to kind of keep this short and sweet because I'm from a high level. Not much has changed the last couple months as we're doing this podcast recording. So, Jenny, dive into data, please.
Yeah. All right. So as Chris mentioned, it's kind of broken record at this point. It's just going the same direction that it has been, but even tighter. So for you guys who have been listening for the past couple of months, I've been just echoing how tight inventory is and how hard it's been to get something under contract, and it's just getting even harder. So that's been fun for everyone, I think, except for sellers. They've obviously benefited from that. So yeah, just going down some of the typical things that we look at, showing trends. This is pretty interesting to me. I feel like, Lon, who creates these reports, had to actually expand the scale on it to account for January 2021, which is about 18 showings per property, which is just nuts. That's in comparison to even 2020, it was at a little under 12. And then from 2019, it was at 9. So just to kind of give everyone some background as to how much it has jumped up, which would typically indicate that there are just a lot fewer homes to show. So everyone is seeing the same homes over and over and over again. And then going down to the listing and sales summary, I think this is always what surprises Chris. Total active single family homes in January 2021, 339, which is just insane. Even January of last year is 865. So, less than half of what it was this time last year. And it was even less than what it was in December, just, a couple months ago at 379. So everything just keeps getting tighter and tighter and tighter. Median sales price is going up. That makes sense. People are paying more to get into these homes. So I think that makes complete sense. And then going down to condos and townhomes, same story, just different scale. Total active inventory, 28 units.
And something, I'm looking at the same screen you are, Jenny, and for all the listeners out there, we got this on YouTube, and these screenshots are on the blog post and the show notes as well. But January 2021, you had 339 homes. Last January was 865. That's a 61% decrease from last January. And that's even more because I just recorded the Denver stats this morning. We're at like a 53% decrease year over year, and you're at even a higher decrease than the Denver market is, which is absurd.
Yeah. It's just unbelievable. And it's, very frustrating for buyers when you go to a home and there's literally a line of people like an amusement park waiting to get into the home because you can't have overlapping showings and everything. So it's definitely an interesting scene for sure. So then just kind of scrolling down to some of the other statistics that we like to highlight. Average days on market, January 2021 ended at 17, which is very, very low. Just for reference, January of 2020 was at 30. So almost half the amount of time between last year and this year to sell your home, or to get it under contract at least. But that's wild. And that's, taking all properties into consideration. And I have to imagine that some of the higher priced homes are probably dragging this average days up a little bit. I would be very curious to see what the average days for a median priced home is. I have to imagine it's a weekend. That would be my guess on that. And then some of the same before, average and median sales prices this month ended at a median price at 385. And just for comparison of last year, this time last year it was 336. And the year before that was 303. So it's just climbing up pretty significantly. I would not be surprised if we hit 400 by the summer, if inventory doesn't start to increase a little bit. And then, yeah, that's kind of more of the same. I think one thing that I did want to highlight was that there's an article from the Gazette, which is the Colorado Springs newspaper down here. And some of the points that it made was that this is actually the lowest inventory that Colorado Springs has seen in 25 years. Which, if you think about Colorado Springs 25 years ago, there was significantly less people, less demand of people wanting to live here. So the fact that we're in today's, today's point of time of people living here and needing to buy a home, it's matched from 25 years ago, which is just wild to me.
Well, plus there was probably overall less houses and structures as well 25 years ago as well.
Yeah, there's a ton of new construction popping up all over town. They can't build as fast as they need to. But yeah, it's frustrating out there for buyers. But if you're a seller, I would definitely recommend considering doing an equity analysis, seeing is selling your home the best way to reposition your equity. I think that this market, you're probably going to get whatever you want within reason for your home. So it's definitely worth considering for that.
Yeah, and I mean, because this is something we actually had a conversation yesterday, Jenny, with a client, and we have this conversation quite a lot of times. Is hey, for people who have owned property for a few years, you're sitting on some equity most likely, and usually paying off the property is not going to be the most optimal way to help optimize someone's long-term cash flow and like net worth goals. But by either doing some type of cash out refinance or sell and do 1031, just some powerful ways to go out there and take, one of the great returns that the market has given us out here. You take it and you redeploy it. And even though prices are higher, when you look at the modeling and say, hey, you're going to pull equity from this property, much $100,000, $200,000, and yes, you're buying properties more expensive today, but what's going on here is you are re-leveraging that equity. So you're taking your money in your real estate piggy bank and your property out there, and you're redeploying it with leverage. So a lot of times you might be at a 50, 40% loan to value on your current property. Go out there, redeploy it, so you get higher leverage in your current property. If you refinance it or you had to sell it, you're taking all those proceeds and then re-leveraging from a 15 and 25% down payment, oftentimes into a better rental property and locking in today's low interest rates. So while the market is hot and it's going up, it definitely we can definitely make the case on a spreadsheet, and we've both done it ourselves, and we've helped a lot of clients do it as well, to go in there and tap in your equity and go out there and redeploy to increase your cash flow and help you achieve your longer term, cash flow and net worth goals.
Absolutely. Yep. Couldn't agree more.
All right. Well, Jenny, anything else? I know we kind of talked about before we record. This is just going to be a short and sweet podcast, right?
Nope, it's just kind of more of the same. Hoping that some more houses hit the market soon, so that we can get some of our buyers into properties having a better chance for that. But I don't really see any signs of that happening anytime soon.
Awesome. Well, if people have questions on the market or they want to look at that return on equity analysis, because we have a pretty cool spreadsheet we built to analyze that, just email Jenny at envisionrea.com, and she'll get you set up on there. All right, Jenny. Well, another great update. So thank you so much.
Thank you, Chris.